Good evening and welcome to a brand new show of markets. Tomorrow, first trading day of a brand new week is in the book, and if you are a Nifty watcher, unfortunately, the brand new week is off to a rather poor start.
Good evening, everyone. I'm Navneet Saluja. Well, we'll get you all the top voices in the next 30 minutes. We'll be joined by Nilesh Shah, MD and CEO of Axis Direct, Prakash Diwan, Director of Altaman Capital Management, and for the technical, Sandeep Wagle will be joining us, who's the founder and MD of Iptat Technical Advisory Services.
Sandeep, not here, not there. We are not going below 6,000, but we are not crossing 60 to 50.
Good evening, Nikunj. I think yes, we were in for a big disappointment today, and though I will not say the trend has turned or we are on the way down, but certainly a spoke in the wheel as far as the momentum that was seen in the last week is concerned. The way we bounced towards 6,300 in the last 4 or 5 trading sessions from 6,100. That is, I will still not say that it has been washed out, but yes, the momentum has been halted. The trend still seems to be positive. I am fully with you, and I still maintain my target of 6350. Now, on Friday, had you asked me, I would have talked of a couple of days. Now, I would talk of maybe a couple of weeks, and we may come down to 6200, 6180 before the next leg of the rally or the move starts. So, broadly, 6150 to 6350, that view still remains unchanged. More stock specific and more in mid caps.
Well, let's also get Prakash Diwan on board to discuss the fundamentals of the market. Prakash, talking about the Nifty first, would you buy into these dips or do you see further selling pressure for the markets?
I guess the selling pressure should continue, particularly in the large cap stocks, particularly the Nifty and the Sensex heavyweights, because that's where pairing of positions would be even profitable at this point in time. And one of the reasons why IT has succumbed to this whole selling is because the US is likely to start looking at intervention in some way, and the last experience between the stalemate that we saw between Russia and US on the Syrian crisis doesn't augur very well for the global market. So I think amongst the emerging markets, China has had some weakness, Brazil is in its own state of mess, Russia is kind of added to the list, so that probably leaves us with a little bit of a hope out of the BRICS nations, and hopefully we will probably start seeing some resumption of flows once this stability comes, or once this panic of sorts kind of starts subsiding. So my sense is the mid caps will be the area to watch out for, but the profit booking would continue in the Nifty constituents to some extent.
And to be fair to the bulls here, of late Indian markets have attracted disproportionate amount of flows, and India is no longer high on the risk scale. Nilesh, for someone who's trading long, I guess the big question is that how should one read into this leg of the rally, and in the short term, is this as good as it gets?
I think yes. The markets have been remaining firm, and especially when we met last on vote on account, markets were a little bit down, but from there it has recovered. So my feeling is that as we move into the next phase of uncertainty, the GDP growth was lower, quarterly results of March will influence the market, and then the biggest question will be election results. So markets will be volatile, and probably in the near term they will consolidate around current levels, neither big up move nor big down move.
Okay, let's do a chart check on a couple of stocks which gained today. Sandeep, what's the view on stocks like NMDC and IDFC, which were the top gainers on Nifty today? Do you see further upside for these stocks?
Only the further trading upside, but not very greatly enthused by the pattern of IDFC at least. Which is the other stock you said, NMDC?
Yes, Sandeep, NMDC.
No, it is not. It is on a bounce back mode. So I would neither buy an IDFC, neither an NMDC. And if you are in it, in fact, higher levels, one should exit, specifically NMDC. IDFC is more range bound. I don't see it breaking the prior swing low. I don't see it going up in a big way. So broadly, mildly positive if you ask my view, but I would not touch it.
Prakash, the heart of the market today has got hit. IT, large cap IT and large cap pharma stocks have come down and they've cracked on strong volumes. Do you think in the short term the risk reward ratio is not in favorable of buying exporters, or exporters will continue to outperform Indian markets all the way up?
My sense is the latter is what I would go with, Nikunj. Export-oriented themes will play out very favorably. This is possibly just a blip given the uncertainty that always surrounds any kind of a geopolitical tension. And I think the Ukraine-Russian crisis is probably a little bit of a pocket of worry. It's not something which could have the ability to disseminate into something very large that could upset the export markets. And if you look at numbers or even statements from the management of the likes of a Bajaj Auto, classic export-oriented story that's been so robust in the last so many years, and of course gaining strength. Very clearly they're finding newer pockets to absorb their products, if not two-wheeler, three-wheelers. And the next big thing after BRICS in my view is going to be what's been very fancily ascribed as MINTS, and that stands for Mexico, Indonesia, Nigeria, Turkey. So there are these pockets of absorption that are emerging in the global markets, and we would continue to benefit out of the salience that some of the companies have achieved. So I would continue with the export-oriented theme. In fact, these dips are ideal time to buy into something which you always wanted to, and probably the run-up was too sharp and it caught you by surprise. So people need to realize that and not kind of start reading too much into a doom speak of sorts just because the market's lost 1% in a day.
Sandeep Wagle, which is one large cap IT stock you would like to buy?
Nikunj, I would want to buy a Tech Mahindra, which is stood up today and cleared the prior swing high, and also displaying good volumes and momentum, price and volume built up. And as against that, HCL Tech is looking weak. So, I would buy a Tech Mahindra, and on higher levels maybe think of going short in a Tech Mahindra as a hedge. Sorry, HCL Tech as a hedge. But Tech Mahindra, I think, will move beyond 2000 over the next few weeks or months.
Nilesh, talking about the two crowded trades, that's long IT and short the banking stocks. Do you think both these crowded trades now will get challenged?
No, I think so. In the IT sector, the valuations are just around the median valuation of last 5 years. So, valuation point of view, IT doesn't look that expensive. Second, with the currency movement and the likely scenario of uncertainty in the market going forward, there will be trending towards the safe sector or defensive sector. So that will also keep on supporting the IT. Third, globally we have seen that the e-com related transactions have taken place both in the secondary market in terms of acquisition as well as primary market in terms of IPOs. Certainly right now in the US market we are seeing increasing IPOs from Chinese internet and Chinese e-com companies. A balancing part of that will be probably Indian IT sector also. So whichever way we look, neither IT sector looks expensive nor it's the defensive nature of IT sector will allow investors to move away from it. So from that point of view, long IT sector looks a particularly good trade. On the other side, in the banking sector, especially the public sector undertaking, the valuations have become quite compelling. However, in the near term, there are no triggers in terms of, their concerns on the NPA side. Clearly, they will be beneficiary if there is a strong government and adequate steps are taken to address the concerns on the NPA side. So for the time being, long IT short PSU bank trade appears to be good trade.
Well, we also got auto dispatch numbers today. Even though auto dispatch numbers were slightly mixed, TVS Motors reacted very well, like Navneet pointed out, because what they've reported for the month of Feb are strong numbers, and because of that big new launch, they managed to regain some lost market share from Honda and from Hero MotoCorp along with Bajaj. Nilesh, what is your take on autos? Because even though all auto stocks have their different dynamics, the underlying theme is still that there is a visible and a marked slowdown in auto as a group and in that particular sector.
I think within auto sector we'll have to now divide all the three components separately. The two-wheeler companies are running on their own dynamics, which is primarily urban consumption. The commercial vehicle is driven down by the slowdown in the mining and the construction sector, and the four-wheelers where primarily corporate activity is influencing the decision. So overall in the auto sector we probably foresee that in the near term there are no upside triggers. You have concerns in terms of tight liquidity and higher interest rates. You have concerns in terms of inflation curbing urban consumption. So effectively, the demand will be slowed. In the excise cuts, even though it's being gradually passed on to the consumers over a period of time, is unlikely to have a material impact onto the demand side. So in this scenario today, probably you will have to be very, very select bottom-up stock picker in the auto sector rather than overall top-down approach.
Well, the consumer durable index has been doing pretty well in the past few sessions. Prakash, what is your view on consumer durable stocks like Titan, which has actually, given good returns in the past 3 to 4 sessions? Would you buy any stock at current levels?
I think Titan, of course, is a unique story. It's definitely on its upswing in terms of from an oversold kind of a territory into something that people have realized offers tremendous value as a diversified basket of a lot of other businesses which are difficult to replace. So on a sheer replacement cost basis, if you see what Titan has achieved, you are actually undervaluing the stock even at 240, 250. So my sense is that's where a lot of nibbling is happening there. But on the consumer goods side, very few companies
lost him
really
there.
Strong.
Lost him there just when I thought he was about to make that all-important point about Titan and why Titan has managed to bounce back. We lost him there. Sandeep Bagle, do you think the worst of the price action is behind Titan? Because in quick time from levels of 210 to 250, it's moved from 210 to 250 in a matter of just 3 weeks.
Nikunj, I think the bottom is certainly made. At 210, it has found a very strong support. Now, if you ask me whether I'll buy it tomorrow, I may not. Maybe 230, 220, that is the right level to buy. Can't say whether it will come, but if you have the market which is not so bullish, I would wait for some kind of a decline. But if you ask me my monthly over the 6 to 12 months view, I have a view of a 300 in Titan. So I remain bullish in the long term. The short term, I think probably will get a little lower levels to buy. But yes, 210, I don't see that being broken.
Prakash, give me a list of stocks which you are happy to buy right now, irrespective of the election outcome.
Okay, so essentially you're talking about the politically neutral portfolio that we've started talking about, and the first thing that comes to mind is a stock like United Spirits. The second that I would add to this is Cox and Kings. There would be also, of course, a stock like Titan into this more from a valuation, attractive valuation perspective, and that's something that I believe will offer a lot of defense. The kind of consumption that we expect pre-election is likely to see people buying into a lot of products that Titan offers. The other area which I would believe could do well is two-wheelers. I would agree with Nilesh that there is consumption demand that's the urban consumption pattern that's slightly weakening, but Bajaj Auto at this point in time definitely looks much more promising than even a TVS now. So these are stocks that you would wear around, and some of them would be extremely focused onto exports and the pharma space, and the likes of Sun Pharma Advanced Research that I had pointed out a while back on your show. These are stocks that are insulated from whatever happens, or Tata Elxsi in the IT space. So, those are what I would continue to going for, keeping my blinders on the political uncertainty.
Well, what are the dealing rooms suggesting for tomorrow's trading session? Let's go across to Pranay Jain to find out. Pranay.
Well, dealers are recommending a sell on Sun Pharma and a buy on Federal Bank. Now, it's not usual that you have a sell rating pasted for the pharma major, but this is based on analyst concerns, where recent reports have indicated that niche products such as doxycycline and Doxil, which together account for 25% of the company's products, are expected to face increased competition over the next 12 to 18 months. In the last couple of quarters, we had seen a sharp upswing in the company's profits, and that was because of the price hikes taken by the company's subsidiary Taro, as well as the production issues which the competition had been facing. But both these are set to see resolution in the coming quarters, and that is why this pricing power as well as the jump in profits is expected to wane away. Therefore, dealers are recommending a sell on Sun Pharma, and they see it declining to levels of 600 soon, which ended today at the lowest point of the day. Also, you have Federal Bank on the other side, which rose for the second straight day and shut shop after climbing 3%. Interestingly, it was the sole gainer on the BSE BankX, giving an indication of the relative strength to its peers. Now, last week you had the CCA which gave the nod to raise the foreign investment limit to 74% versus 49% earlier. That will keep the stock supported at higher levels. Also, valuation-wise, it is very attractive with a price-to-book value 1 year forward of just 0.9 times. And therefore, dealers are recommending a buy on this and expect it to climb to levels of 87 soon.
Pranay, thanks a lot for that. Sandeep Wagle, give me your top ideas for tomorrow morning.
Nikunja, buy in Adani Enterprises, stop loss 255, target 280. Sell in Tata Global, stop loss 140, target 128.
Prakash, what would be your investment ideas in the next 3 to 6 months then?
I think I would look at a Gujarat Pipavav port within the infra/export theme that we've been seeking. That's a story that's definitely already up and out, but I believe the momentum is just about to begin. We've seen some very healthy quarterly numbers, and given the kind of capacities that the company still has underutilized, you would see some major ROE gains beyond the 30-33%. So that's a stock that I would want to bet on. Great pedigree as well with Maersk buying it out. So I think that's the theme I would like to go with in this market scenario.